Dirty dealings, corporate battles, consumer woes. This is Evening 5. Public Bank's conditional mandatory takeover offer for the remaining shares of insurer LPI Capital that it does not own has lapsed after it failed to secure sufficient acceptances by the close of the offer on Thursday. Public Bank and its persons acting in concert held a total of 197.48 million LPI Capital shares at the close of the offer at 5 p.m, representing about 49.57% of its total issued shares, an increase of a mere 31,100 additional shares, or 0.01% from the 49.56% it held when it posted the offer on December 19, 2024, according to the statement issued by Public Investment Bank on behalf of Public Bank. However, as the offer did not receive enough acceptances to push Public Bank and its PAC's holdings above the 50% threshold required for the offer to succeed, the acceptance condition was not met, causing the offer to lapse. When the mandatory takeover offer was made, Public Bank had said it would retain the listing status of LPI Capital. Accordingly, all acceptances shall be returned to the accepting holders, and the offerers will thereafter cease to be bound by any such prior acceptances of the offer, Public Bank said in the statement. The takeover offer was triggered in October when Public Bank bought over the 175.9 million shares, representing a 44.15% stake in LPI Capital that was held by the family of the bank's late founder, Tan Sri Teh Hong Piao, for 1.72 billion, cash equivalent to 9 ringgit 80 cent per share. As the acquisition gave Public Bank and its PACs control of more than 33% of the shares in LPI Capital, Public Bank was obliged to make the MGO as provided by listing rules. The offer price of 9 ringgit 80 per share values LPI Capital at 1.71 times its book value and 12.41 times its 2023 earnings. It also represents a discount of 25% to LPI Capital's last price of 13 ringgit before the stock was suspended from trading for the announcement. Malaysia's growth is set to sustain last year's pace and exceed 5% in 2025, driven by foreign investments and government initiatives that can help shield the economy from global risks, Bloomberg reports, quoting two key cabinet ministers. Minister of Finance 2, Datuk Sri Amir Hamzah Azizan, told Bloomberg that the country is already on a positive track, with last year's budget deficit likely below the target cap of 4.3% of gross domestic product. The government plans to narrow the gap further to 3.8% of GDP in 2025. Economy Minister Rafizi Ramli said that a special economic zone Malaysia will co-develop with Singapore will help sustain the country's growth momentum. He tempered his optimism over faster GDP growth with caution on how the policies of the incoming Trump administration will affect the nation. Amir Hamzah, for his part, said he's confident that the nation's diversified economy will withstand the threat of Trump's tariffs and trade wars that has rattled developing nation assets. Officials previously said they expect GDP to grow by about 4.5 to 5.5% this year, largely exceeding the 4.7% expansion predicted by analysts surveyed by Bloomberg. The strength of the Malaysian economy and FDI will continue to support the ringgit, which Rafizi described to be undervalued. The ringgit should be trading around 4.10 to 4.15 against the dollar based on forecasts from the second half of 2024. Technology company Green Packet said its wholly owned Packet Interactive has obtained a digital lending license from the Ministry of Housing and Local Government. In a BOS filing, Green Packet said the license will enable PISB to expand its range of financial products and services. Same as PISB's existing money lending license, the new digital lending license is valid until August 15, 2026. PISB's digital lending solutions are expected to introduce features such as flexible loan options, competitive interest rates, and enhanced security measures to provide customers with a seamless borrowing experience while improving user satisfaction. Green Packet, with demand for flexible funding options on the rise in the digital economy, PISB is well positioned to play an impactful role in providing innovative access to lending options tailored for small and medium enterprises. As of March 2024, PISB had extended about 32.2 million in loans to 8 borrowers operating across various sectors, including investment holding and food and beverage, Green Packet's annual report showed. Green Packet's largest shareholder is Kunal Tayal, who holds an 18.71% stake in the group through his investment vehicle Authentic Design Resources. He also serves as the Chief Financial Officer of Bestinet, an IT systems provider responsible for Malaysia's foreign workers' centralised management system. National power provider Tenaga Nasional views data centres as highly attractive customers for its infrastructure projects, offering excellent returns on investment. TNB President and Chief Executive Datuk Megat Jalaluddin Megat Hassan said that the data centre's consistent energy consumption, as reflected in the constant load factor throughout the day, make them ideal customers. While these power-guzzling data centres lead to increased power demand, Megat Jalaluddin said its planned grid upgrades will cater to this. It was previously reported that TNB expects to see electricity demand from data centres reach 5,000 megawatts by 2035, accounting for 15 to 20% of total electricity demand in the country then. More recently, the Ministry of Energy Transition and Water Transformation projected that electricity demand for data centres would hit 20.9 gigawatts by 2040. Peak total energy demand last year stood at 20,066 megawatts on July 25th, according to ring-fence single buyer within TNB, which acts as the sole buyer of electricity from power generators in the country. Major shareholders of NPC Resources are in talks for a proposal that could lead to the Sabah-based palm oil producer being taken private at RM2.82 per share. The discussions are exploratory and are still ongoing, and there is no certainty the proposal will be implemented, according to a joint statement from Jubilant Ventures and Executive Director and Group MD Datuk Lu Pangki. If the proposal materialises, the price at which NPC will be privatised will not be lower than RM2.82 per share, they said. In a boss filing, it said that shareholders are advised that this is not a notice of firm intention from the joint offerers to privatise NPC, and there is no certainty that the proposal will be implemented. In this regard, shareholders are advised to exercise caution when dealing in NPC shares. Lu, the co-founder of the plantation company, currently is the largest substantial shareholder of NPC, holding a 24.34% direct stake and a 31.62% indirect stake through private company Jubilant Ventures, Bloomberg data showed. The announcement followed a surge in the share price of the usually thinly traded counter, which hit an all-time high of RM3.30 during intraday trading on Thursday, up 14% or 40 cents from its previous close of RM2.90. For context, NPC shares traded between RM1.61 and RM2.06 throughout 2024, averaging at RM1.84. NPC primarily operates in oil palm plantations and palm oil milling, focusing on East Malaysia and Indonesia. The group also engages in fresh fruit bunches trading, transportation services, marine fish farming and hospitality, including operating the Palace Hotel in Sabah.